Are you in the process of thinking of buying a new car, or have you just wondered what steps you should take when buying a new car? Well, that's exactly what we're going to talk about doing. How to buy a new car and what steps to follow. Before we get into all of that though, make sure you like and follow this page as well as turn on notifications. That helps us keep going and continue to bring you awesome content. What is considered a new car? Year built, number of miles, etc. The basic definition of a new car is any car that hasn't been titled before. This basically means any car that hasn't been bought before, making you the first and only owner of the car beside the dealership or whoever you purchased from. It's important to figure out what car works for you. Go online and read reviews, spend some time comparing cars and features for what you want. Is safety a primary concern? Is speed? What about fuel efficiency? Spend some time making a list and understanding what new car you want. That way, when you're ready to start searching, seeing, and test driving new cars, you will have an idea of what you want and it will drastically simplify things. It also safeguards you from being talked into a car that you don't really want by a really good salesman. How much car can you afford? What's a good metric to use? Once you've decided on a few cars worth considering, it's time to find out what you can afford. If you're interested in financing or leasing your next car, this means you need to figure out what monthly payment is acceptable without breaking the bank. Different shoppers have different strategies for budgeting car payments, and we certainly wouldn't want to impose our own, but we strongly suggest creating a budget before heading to the dealership or the bank. A good rule of thumb is to try to keep your monthly payment below 10% of your income. This means that if you make $3,000 a month, your monthly payment shouldn't be over $300. This is just a typical rule of thumb, and other things can influence this. When budgeting, make sure to tally up all your bills and understand what you can and cannot afford. If you make $3,000 a month, but after bills, you're only left with $500, you might not be able to afford a monthly payment of $300. You might have to pay some stuff off before looking at a new car. Should you get a loan or pay for it in cash? This really depends on where you're at in life. If you don't have a lot of credit history and are looking to build some, it might make sense to take out a loan and show creditors that you can pay a loan back. If you have the amount to cover the car plus some in your bank account and you don't want a monthly payment, then it might make sense to pay for the car in cash. When thinking of how to pay for your car, one important area to consider is insurance. All states require insurance for vehicles, but if you have a loan for a vehicle type, you have to have more insurance than just a liability. That's usually an additional cost, but also protects the vehicle and you should anything happen. If you're taking out a loan, you will typically pay more for the vehicle. This is because of interest rates. An interest rate is dependent on your credit score and which bank you're taking the loan from. Don't be afraid to compare interest rates from different banks. A sizable down payment can also decrease interest rates occasionally. Should you get an extended warranty? An extended warranty is typically offered by the dealership and will help cover the cost of certain repairs to the vehicle when the manufacturer's warranty expires. They are very helpful on occasions, but overall they might not be worth it. Most people who buy extended warranties never use them. According to a Consumer Report survey, 55% of people who bought an extended warranty didn't use it, and only 25% of the people surveyed said they would buy it again. One option to be considered is, instead of purchasing an extended warranty, you can decide on an amount and put that away each month. Maybe it's $100 a month or $75. If you have enough at the time of purchase, you could also take the money for the extended warranty costs and just put that amount aside. What warranties does a new car come with? Most new cars will come with a factory warranty or a 3-year, 36,000-mile warranty. A warranty is a manufacturer's promise that if a problem occurs within a certain period or before a certain amount of miles, the manufacturer will be responsible for the repairs. More often than not, the warranty is built into the price of the new vehicle. There are different warranties, and sometimes a powertrain limited warranty is offered. These warranties are usually 5 years or 60,000 miles and cover the engine, drive components, and transmission. It's important to look at the vehicle manual, which will give you a list of things not included in your warranty, but usually what's not included is fire, misuse, improper repairs, lack of maintenance, water damage, etc. What is considered a good interest rate? As we mentioned before, your interest rate is determined by multiple factors. One incredibly important factor is your credit score. If your credit score is bad, your chances of getting approved go down, and you're far more likely to have a higher interest rate. If your credit score is in really good standing, you're much more likely to be approved and have a lower interest rate. If you don't have much credit history, you might have a higher interest rate just because lenders don't have as much information to go off of when determining how much of a liability you are. If your credit score is prime or 661 to 780, a good interest rate is 3.51%. If your credit score is non-prime or 601 to 660, a good interest rate is 6.07%. And finally, if your interest rate is subprime or 501 to 600, a good interest rate is 9.41%. As you can see, the lower your credit score, the higher the interest rate. Typically speaking, used cars' interest rates are far higher than new cars. According to NerdWallet, the average interest rate for a new car is 3.86%, while the average interest rate for a used car is 8.21%. Pros and cons of buying a new car versus a used car. Purchasing a car is a big life decision. For one, they're expensive, they require maintenance, and they most likely will be with you for a long time. It's important to really think about your needs and what you need from a car, as well as what you currently have and make. What you can and cannot afford might be the deciding factor in whether or not you purchase a new car or a used car. Pros of buying a new car: warranty, lower miles, lower maintenance, usually safer. Technology moves fast and newer cars are safer than older cars. Better gas mileage, usually. Better interest rates. The pros of buying a used car can sometimes outweigh the advantages of a new car. Cheaper. You don't lose as much value. Typically speaking, as soon as a new car is driven off the lot, the value plummets by as much as a third. This is because immediately after driving off, that car is now used and no longer new. So used cars hold value better. Potentially cheaper repairs. If you purchased a used car, you might not care as much about all the repairs being perfect. You might be okay saving a little bit of money and using a used replacement part instead of a brand new part. Would it be better to just use a ride-sharing service? Think insurance, maintenance, and gas costs. The answer to this question is really an individual one, and one that would need to be budgeted. If you don't have much use for a car, then a ride-sharing service might be just enough. If you live in a city like Manhattan and you don't leave the city but a few times a year, a car might not be worth it. It would be beneficial to budget how much money you spend monthly on a rideshare service and see where that compares to what it would cost to own a car. A typical month with a car could look something like this: $300 car payment, $200 insurance, $100 gas, $75 maintenance. Total of $675 a month. If you're using public transportation or even a rideshare service and only spending $100 a month, it would be foolish to own a car. The one advantage to owning a car would be having an asset that is worth money. When purchasing a car, you gain equity when the car is paid off. If you never own a car, your monetary value of assets won't be as much. This can come into play when purchasing large purchases like a home. To sum everything up, it's important to sit down and spend some time figuring out if you can afford a car and how you want to pay for it, either through monthly payments or in cash. From there, figure out what features are important to you and what cars have those features. Make sure you're looking for cars in your price range. From there, make sure you have a good credit score or an understanding that your rate may be higher. And finally, if you do purchase a new car, take a moment and feel proud of yourself. This is a big moment in your life and one that shouldn't be overlooked.